Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a filing from Aditxt, and let me tell you, it's a real roller coaster. It's an amendment about a deal they're trying to make, and it seems like they're throwing money at it just to keep it alive. Aditxt Inc. filed this report, which is actually an amendment to a previous report. This whole thing revolves around Aditxt trying to acquire Apili Therapeutics through a subsidiary called Aditxt. They're doing this through something called an arrangement agreement, which is basically a plan to buy all of Apili's shares. Now, this deal has been dragging on for a while. They've had to amend the agreement, meaning change it multiple times. This is the fourth amendment, so you know things aren't going smoothly. They keep pushing back deadlines and changing the terms, almost as if they are trying to buy time. And here's where it gets interesting. To keep Apili from backing out of the deal, Aditxt has been paying them what they call waiver fees. It's like saying, hey, please don't leave, here's some money. In December, they paid Apili $250,000 to extend the deadline. Then they made another payment of $250,000 again in January to push it further. They really want this deal to happen, and they are having to pay to keep it on life support. It doesn't end there. In February, they forked over another $250,000. And then in March, they agreed to pay another $250,000, but they split that into two payments. All this money to just keep the deal alive. It's a lot of cash just to keep from terminating this agreement. The whole thing looks like they are burning cash just to postpone a decision. Now, this fourth amendment includes some financial statements from Apili and some pro forma information. Pro forma information. Basically, it's a what-if scenario about how the combined company's financials would look. We're getting Apili's financial statements as of December 31, 2024 and comparing them to the previous year, 2023. Keep in mind there's unaudited, which means that they haven't been thoroughly checked and verified by an independent auditor. So take them with a grain of salt, especially since the deal is still ongoing. This gives us a sneak peek at what Aditxt thinks the combined company might look like after the acquisition. But again, it's all based on estimates and assumptions. It is basically saying if we bought them in 2024, this would be our numbers. It includes another recent acquisition, so things are definitely changing at the company. Tannen, now let's get into the actual financials. Apili's total assets went from about 73 million Canadian dollars in March 2023 to about 5.1 million Canadian dollars in might be a reason Aditxt is getting a good deal, since their assets appear to be shrinking. Well, that's a decrease of about 22 million Canadian dollars. It might be a reason Aditxt is getting a good deal, since their assets appear to be shrinking. Their accumulated deficit, which is the total amount of losses they've had over time, increased from about 76.7 million Canadian dollars to about 87.5 million Canadian dollars. This means they lost over $10 million in about 20 months. They are losing lots of money. Apili's total revenue decreased quite a bit, going from about 233 million Canadian dollars in 2023 to about 678,000 Canadian dollars in 2024. They appeared to be losing revenue really fast. Apili's research and development expenses decreased from about 4.2 million Canadian dollars to about 2.7 million Canadian dollars. When a company spends less on R&D, it's generally a sign that they are focusing less on future growth and innovation. General and administrative expenses decreased from about 5.8 million Canadian dollars to about 3.7 million Canadian dollars. Companies reduce administrative overhead when money is tight. Apili's net loss changed from about 8.7 million Canadian dollars to about 10.8 million Canadian dollars. This means that Apili lost more money in 2024 than they did the previous year. This is the bottom line of how much the company lost. So what does all of this mean? It means Aditxt is paying money to keep a deal alive with a company that is losing a lot of money, has decreasing revenue, and whose assets appear to be shrinking. Now, looking at these results more broadly, Aditxt's pursuit of Apili appears quite risky. Apili's financials don't look great, and the fact that Aditxt is having to pay waiver fees just to keep the deal from falling apart is concerning. It raises questions about why Aditxt is so eager to acquire Apili in the first place, and whether the potential benefit outweigh the obvious financial risks. Perhaps they see potential in Apili's technology or market position. That isn't immediately apparent from the numbers, but it's hard to ignore the red flags. Maybe they think they can turn it around. Aditxt needs to be careful not to throw good money after bad. They need to have a clear plan for how they're going to turn Apili around and make the acquisition worthwhile, or they could end up regretting this deal 6. Thanks for watching. If you enjoyed, please subscribe, like and comment.